Hello and welcome to the show. Now, KKR, a bulge bracket private equity firm, a foreign investor in India with assets under management of over $550 billion across the globe and over $10 billion in India. So we are talking about KKR, and from the top team, global top team, I have with me today Henry McVey, who's joining us right here in Bombay. Thank you so much, Henry, for joining us and coming to CNBC-TV18 for a chat. I hope your stay in Mumbai has been good so far.
It's been excellent. I've been coming to India for years, so it's wonderful to be back.
That's great. And of course, the focus of foreign private equity players in India has also been increasing. And India is looking much more attractive. So I want to pick your brains on that. But first, we have entered 2024 with so many events taking place. Yeah. And it's going to be a very eventful year in terms of elections in India. Then US elections is what is keeping us busy right here as well. Yeah. And on the other hand, the macros. We have been dealing with geopolitics, then rate cuts are anticipated. Putting all these together, how do you summarize an investor sentiment with the key macro factors on your radar?
Simply put, glass half full. When you go around the world, constantly people have been underestimating growth, certainly in the US. If you look at first quarter GDP estimates, they're at 1%, and GDP is tracking around 4%. So we're trying to find, despite geopolitical tensions, despite changes in supply chains, there are actually a lot of really big investment themes that we're seeing. Digitalization, automation, infrastructure. There have been some really big things that KKR has been investing behind globally across the US, Europe, and in Asia, and we're certainly seeing that in India as well.
That's right. And in terms of the strategic shift that took place a few years back with COVID, new age companies came in, then of course inflation rose, and then interest rates were higher. Putting all that into perspective, how are we now positioned globally? Of course, US recessionary concerns have been there. And then now every investor is penciling in a turn in the interest rate cycle. And that is likely to be the biggest propeller for equity markets to grow and investments to grow. How do you see this? And you sitting in the US, how do you, conceptualize what's going to come out of this?
I mean, one of the great things about working at KKR is we own about 150 companies globally with a big footprint in the US. I would say we think the economy is actually doing better than what most people think. The difference this cycle has been employment. There's somewhat still a labor shortage. Unemployment's around 3.7%. So we feel pretty good about that. I think the market has been pushing the Fed, saying at one point a couple of weeks ago they were anticipating 8 Fed cuts. We don't see anything near that. I mean, when you think about wages, supply chain changes, there's some different things going on this cycle that make it different. So I do think the Fed will be easing by the second half of the year. And I don't think inflation gets back down and stays at 2%. So what we've been saying internally in the US is there's maybe a higher resting heart rate for inflation. And so in that environment, what do we focus on? We're focused on wages, which we just learned last month that are growing 4.5% year over year. Unemployment rate is pretty low, and frankly, jobs came in a lot better. There will be some slowing in the second half of the year, but inventories don't need to be destocked, and I don't think housing is going to have a bust. I mean, my background is in financial services, so I'm constantly studying the plumbing, and I think within the U.S. we're gonna be just fine.
And of course, financial services also lifeline of the overall economy. So definitely a good indicator. But putting all this into perspective, how do you view India? And is there a shift and a strategic shift when it comes to KKR's view on India?
Let me take a step back and say, so KKR has a large balance sheet of its own, and maybe 6 or 7 years ago we made a commitment to increase that exposure to Asia. So we've gone from about 10% to now north of 20%. India has been a big part of that. And if you look at our footprint today, we're doing a lot across infrastructure, a huge area of focus, credit, and then obviously our hallmark, we helped invent the industry in private equity. We remain very bullish on deployment here.
Right. So when you say that you're bullish on India, is there also a sector rotation, Henry? I wanted to understand because KKR is one of the few investors in the country which focused on capital-intensive sectors. You had an investment in cement, and a large one at that. Now, most of the other private equity firms have really focused on the same old sectors which every private equity player loves. Now, what is the sector rotation? Are there new areas that you're looking at? Is there a view?
Yeah, well, I get asked this question all the time. I mean, one thing is private equity is not a stagnant business. I mean, what happened pre-COVID and then what happened right after COVID and what's happening today are different. There are more corporate carve-outs, there are more public to privates. In India, there are more control buyouts versus when I first started coming to India with KKR. Look, to us, the services business, experiences over things, that's certainly a big theme for us.
Yes.
There's a lot going on in other parts of the higher end consumer where spending patterns are actually quite attractive. And then there are businesses that we've owned here when we've actually taken them globally, right? We have a great network where we owned actually a big tire company that we were able to take.
That was a big exit for KKR.
Yeah, so there are lots of different ways. I mean, one of the things that I think our team does a great job, both in India but also globally, is what themes travel around the world and how can we leverage that expertise. But we're very committed to this country. It will be one of our bigger markets in Asia. And as I mentioned, our overall Asia exposure has increased pretty substantially. And I think that's something we'll continue to do over the next couple of years.
Right. Before we talk more about India's sectors, do you think this China plus one advantage has worked in India's favor? What's KKR's view on that?
Yeah. Every country, I mean, if you think about, we lived in a world of kind of, just-in-time inventories, and now we've moved to just-in-case. So I've been to China 3 times last year. What you see is China's still very dominant in terms of exports, but most companies want security. They want security of everything: data, energy, water, transportation. And so they are rethinking their supply chains. India's clearly been a beneficiary of that. That doesn't happen overnight. It takes time. You need to get confidence. You need to work with the government and ultimately hire the right people to deliver your value proposition in this market, and then make sure you can export that quality abroad. So we've seen that in Vietnam, we're seeing it in India, Mexico. These are all countries that are net beneficiaries. But I can tell you from being in China, their exports as a percentage of global exports has actually gone up. So things are working. They're just working differently than what we saw in the past. I think that's one of the most exciting things as an investor is to think about what's going to be a beneficiary. I mean, India has a very capable workforce, and there are things that you can do combining that with technology that some other countries can't do. So I think it's actually, that trend is true, but I think it's going to take time, and it's going to come in different forms depending on what country you go to.
You spoke about the large workforce that India has, but we also have demographic dividend, which is one of the propellers, again, one of the positives that foreign investors really look at. But a lot of investors have shared with me that the consumption demand has been disappointing than what they were expecting. What's your view, and are you still interested in this space?
I mean, look, it's 60+% of the economy, so you have to be interested in that space. One of the things that we've seen globally, and it's not specific to just India, I'll use the United States as an example, is that inflation has taken away the real growth in incomes. That's very different than what was happening pre-COVID. So I think you have to look at, our wages going up, but where are they going relative to inflation? And what you see in some of the data in India is that certain segments of the population haven't had as much growth on a real basis, which is kind of X inflation. So that's something we do focus on, and then ultimately what different parts of this economy are changing, and so there'll be friction costs along the way. But you're sitting in India, but as somebody who goes all around the world all the time, this is a very, I'd say, lucrative market, and it's actually a very compelling market, and it's not going to be perfect. There are going to be ebbs and flows. But when you look at the overall growth, you just take the Indian stock market, it's been compounding 11% per year. Overall, emerging markets has been compounding at 3 to 4%. That's over the last decade. So there's been 600 to 700 basis points of value creation in India that you haven't seen in other markets.
That's right. So our growth potential going forward, that also looks very promising, Henry. Would you agree with that?
Yeah, but to me, what is GDP? It's labor force growth times productivity. What India has done really well is on the productivity front. And I think that this current administration, the government, has done a good job doing things around technology and financial services to help drive and sustain that productivity. I mean, there are actually no other countries that are trying to incorporate 1 billion for people into the workforce. So at times there are going to be challenges. But when I look at the policies and what Modi has delivered on, they've actually been pretty successful.
Right. So reforms by this particular government is something which has attracted the foreign investors like yourself, you will say.
Yeah, I mean, look, KKR, most of our investments, our capital is 5 to 7 to 10 years. I mean, we don't do 1 week trading or 1 month or even in 1 year. So we're here, when I walk around this office, what are we seeing? We're seeing people that have been at KKR for 10, 12 years that are committed to investing capital over that time. So we're thinking about what are the long-term value creation drivers, who are the executives that we can partner with. In this market, as you mentioned earlier, it is changing. I mean, what we were doing in 2011 when I joined KKR and what we're doing today is quite different. There's a much more robust capital markets. Some of the larger companies want to partner with KKR, bring in our global expertise, and then there's the ability to do more control deals than in the past.
Right. So many investors, Henry, are penciling in a clear mandate for the present government, given the way things and signals are really coming in. What is your view that the government should do and should fix as an investor, which will attract more FDI into the country?
I think the government's doing a pretty good job. There's a fair amount both of local money that's moved out of gold and real estate into the capital markets, which I think is very healthy. And then foreign investors are coming along. I think when I first came to KKR in 2011, we wrote a piece about what India maybe wanted to consider, and this is before Modi came into power, but we talked about infrastructure. We talked about getting inflation and the deficits down, and then ultimately we thought about giving businesses clarity about what they wanted. All three of those things have largely occurred. So I think there's a good momentum in that direction.
That's right. On all three fronts, our government has taken steps in the recent past. And a lot of things have really come to a formative stage. But Henry, we'll chat more about this right after a very short break. Stay tuned. Welcome back. We are in discussion with KKR's Henry McVey. So Henry, you were talking about the various reforms which the government has really put in place, which have shown results and which have attracted FDI into the country. And infrastructure is one of them. And of course, InvIT is one play that KKR has capitalized on, has made investments, right? One of the early investors, I would say, from the private equity space. What else is on your radar? You're a financial services expert. And there again, KKR has made some very selective investments in different pockets apart from banks. What is your view, and what are the areas that would interest you?
Look, I think what we were talking about earlier, which is we have several global themes. Certainly across Asia, we're very interested in healthcare, and we've been investing behind that in India as well as in Japan and other countries. We talked a little bit about infrastructure. I mean, what's happening there? Data security. Ultimately, I think there's more to do there. And then there's energy and the transmission of energy. How do you do that on a consistent basis? So those are big themes. And then ultimately, you continue to see consumption upgrades around the region, and India is a beneficiary. And I feel strongly, and I think our team reflects this, is that this whole idea of kind of what we say experiences over things, right? What you see globally is the services part of the economy is growing, and within India, that's become important as well.
But your view, expert view on the financial services space on India?
So what I would say right now is that conditions are quite good, right? You're coming out of a long kind of stagnation where credit losses went up, certainly going into the pre-COVID period. But we met with some different financial services companies during this trip, and provisions are quite low. The consumer is doing pretty well. I feel pretty good about the overall health of the economy, and frankly, I think the real estate market is improving, whereas before we had some headwinds. So I think that part, you always have to stay cautious and stay focused in financial services, but there's some really interesting things companies-wise that have emerged in India that I think we can invest behind and partner with CEOs to deliver value.
Fintech is a huge part of it now, but it has struggled because of the various regulatory disruptions, right? Do you have a view on this particular space and the new age companies where, again, KKR has made some investments?
Yeah, look, ultimately financial services is changing because of technology. When you look around the world, that's not an India-specific comment. So you have these incumbent companies, traditional lenders that gather deposits and they lend, but what you've seen accelerate over the past 10 years is, are there new ways to do that? And so I think that'll continue to be something that we evaluate. But again, I get back to relying on our, Gaurav and the team to figure out what, what are the best companies in the right sectors with the best management teams. I mean, again, what does KKR do with its private equity? We find great CEOs, we partner with them, and then we help make their businesses better. And so I think we're still committed to that, and that's certainly true in financial services.
No, that's right. And in fact, JB Chem has been one of the very remarkable investments by KKR. Now, I wanted to understand, since you look at risks globally, when it comes to India, how does the risk-reward metrics really stack up right now?
Yeah, look, I think most of the economy and certainly the capital markets are they're integrated. And so what, you mentioned this earlier, so what could upset the apple cart on a global basis? It would be that the market is starting to discount that the Fed is going to be on an easing campaign. Yes. I mean, I was in Europe this week before I came to India. Certainly in the US, there's a lot of optimism that the Fed's going to cut. So I think, what should we all watch? We should certainly watch that maybe inflation's a little more sticky, and that will have an impact on all currencies around the world. So that's one thing I would say from kind of let's watch the Federal Reserve, right? And then second is, there's still a lot of money that was put into the global system post-COVID. If you look at the 4 big central banks' balance sheets, it's still way above historic levels. And so how they bring that down and they kind of neutralize that and that liquidity drain, that's something that I watch. But when I look around the world right now, there's some really good things happening. Companies are doing massive buybacks. AI is a powerful technology change. Emerging markets, we see a real kind of consumption upgrade. And then even markets like Japan that were in deflation, they're exiting deflation and having even a little bit of inflation. So when I put the backdrop together, all together, I'd say the technicals are actually quite good. A lot of investors have actually not participated. When you look at cash balances around the world, particularly in the institutional community and some of the individual investors, they haven't been as invested. We aren't seeing a huge wave of IPOs. We're not seeing a huge wave of high yield issuance or levered loan issuance. So the technical backdrop of supply is actually pretty good. And the fundamentals this cycle, I think, are going to be different. I don't think we're going to have this synchronized global recovery the way when I started in the business in the 90s, everything went up and then everything didn't. I mean, what I see around the world is kind of a rolling recovery and a rolling recession. And so I think that's a change in pace. And what India provides investors relative to that has actually been pretty stable growth. Good demographics, but really it's been the productivity, and then there's been some improvement around the capital stock. And so I think India will continue to be a net beneficiary.
Right. India will be a net beneficiary, but you did mention the rolling ups and downs in the global economy. Yeah. Can you elaborate a little bit more on that?
Well, look, I mean, let's. I was recently in Germany. What's changed there? China has slowed down some in terms of their connection of trade with Germany because the Chinese economy has been slower. At the same time, Russia's invasion of Ukraine actually elevated the price of natural gas, and while it's come down from the peak, it's still well above where it was. So that's a change. Right, so Germany, when I joined KKR in 2011, Germany and the UK, those were the stalwarts. And now, when you look at it, Greece and Spain are actually maybe growing faster. But I think a lot of times people run away from when there's economic instability. Most of our best investments over time have been when people are running away, because that's when people need capital. And if you can find the right companies to partner with, they're fine. So I think, versus a world where maybe a decade ago or 2 decades ago it was kind of all moving up to the right and then it would go down, we've got to learn as investors to how to navigate these dislocations. And it's been that way, frankly, since COVID, which is we've had more geopolitical tensions. We've ultimately had a pandemic, which none of us had lived through. But what you see is there are themes that come out of that, right? You've seen supply chain resiliency is a big theme, digitalization, automation, backup facilities around the world, and then certainly we've been investing aggressively as a firm around fertility and things like that actually offset slowing demographics. So again, I get back to what I said earlier. You're going to look at the glass half empty, or you're going to look at the glass half full. And I think what we found at KKR with cautious optimism is to look at the glass half full.
That's right, and you have managed to find many investment ideas in a very structural changing world as well. Yeah. Now, I wanted to understand the supply chain concerns globally, and are there any factors which are not getting penciled in or baked in into the markets and market sentiment, which you foresee right now, which should be kept on the radar?
I think actually what we see in our data is supply chains have actually gotten better. There are certain instances, in the manufacturing side where you may not have an input, but a lot of companies have actually diversified their supply chain. We had one company in Asia that actually used to get one part from one supplier, now they have it from 4. So there's actually more resiliency built in. We're certainly watching the events in the Middle East around the Red Sea, and that's something. But when we track that, right now it's actually affecting just a few companies. But overall, I mean, we released our public results yesterday. I think you can see from that generally that's not the biggest concern that we have in the market right now.
Okay, so that's not a big concern. And just to get your final comments on India, Henry, how do you see this particular year? Let's break it down to extreme near term. How are you seeing?
I mean, look, we're investing for 5 to 7 years, and we've got to bet on sound government. We have to bet on consumers that we think are going to be employed, and we have to ultimately bet on countries that are going to invest in their infrastructure, and they want strong private sector partners. And I think India delivers on that. So I'm not going to comment on is the market going to go up 2 or 3% this year. Our view is on a long-term basis. What we do, this is a great place to be invested. We've got a wonderful team here on the ground, and we're very committed to deploying capital and kind of helping India grow.
All right, so the biggest takeaway is that KKR is bullish on India investments at the moment.
We have been, and we will remain that way, yes.
All right, very, very interesting thoughts from you at a macro level and about the India strategy and focus for KKR, Henry. Henry McVey, thank you so much for joining us right here on CNBC-TV18. Thank you.
Thanks for having me. Yep.
And thanks to all the viewers for tuning in to the show. Thank you.